Hello and welcome to episode 12 of the Talking Central Banks podcast with me, Karan Merishi. This platform is exclusively dedicated to everything central banking, monetary economics, and policy technicals for observers across the world. Today, we will be talking about the crisis management experience of the Central Bank of Sri Lanka in the aftermath of the COVID-19. We will primarily discuss the monetary policy challenges and policy decisions made by the central bank during the containment period amidst the fiscal response and global headwinds. Our guest today is W.A. Wijewardena, who was the Deputy Governor of the Central Bank of Sri Lanka between 2000 and 2009. Vijay served the institution for nearly 40 years and was involved in almost all areas of central banking, including economic research, monetary policy, financial system stability, currency issuance, public debt management, and commercial banking. While at the Sri Lankan Central Bank, he initiated the setting up of Sri Lanka's accounting and auditing standards as the chairman of Sri Lanka Accounting and Auditing Standards Monitoring Board between 2000 and 2008. He also led the establishment of the Credit Information Bureau in 1990 and steered the Central Bank Modernization Project, which eventually introduced a modern payment system in the country called the Real-Time Gross Settlement. This was in addition to his leadership roles in other notable implementations that were pivotal to the Sri Lankan economy. Vijay holds Doctor in Business Administration degrees from California Metropolitan University and the European International University, Paris. Currently, he serves as the president of Sri Lanka's Business Management School, or BMS, and also serves as an adjunct faculty at the Asian Institute of Technology in Thailand. He also writes the My View Economics Matters column for the Daily FT. It's an honor to host you on the podcast, Vijay.
Thank you very much for having me, Maharishi.
My pleasure. Vijay, first and foremost, can you provide us with a brief understanding of the nuances in managing the central bank of a small economy? As an economy running a current account deficit and being at the center of a geopolitical rivalry between two very large economies, that is China and India, what have been the experiences as a central banker?
Well, Maharishi, now, since it's a very small economy, which is basically dependent on international trade for creating prosperity and welfare for the people, Sri Lanka cannot ignore the geopolitical forces that are around Sri Lanka as well as outside Sri Lanka. So therefore, the two countries that you mentioned, India and China, they are at war with each other economically, not physically. But at the same time, Sri Lanka has to have relationships with the rest of the world. Therefore, it should be completely a free trade regime, which Sri Lanka should have. For that purpose, Sri Lanka will have to manage its exchange rate properly because over the 76-year period of independence of Sri Lanka, most of the period Sri Lanka had been under an exchange control regime. We have opened the economy only very recently, and therefore our experiences are also very, very little experiences on that in that respect. So what I mean is that for the central bank to manage the economy means that the most of the forces are outside the purview of the central bank. So as a result, central bank will have to take cognizance of what is happening outside Sri Lanka, and also they adopt the appropriate monetary policies to suit the emerging situations. For example, since Sri Lanka is dependent basically on USA for its exports and also European Union, and we are having a trade surplus with both blocks, and which had been the main area of contention by Donald Trump recently. And we have to sell our goods to them. We have to sell our services to them, but at the same time, we are importing a large segment of our import requirement from India and China. So therefore, we are running a trade deficit. So therefore, those two trade deficit will have to be financed out of the partly financed out of the surplus that we generate from European Union, UK, and USA. But at the same time, as you said, Sri Lanka is running a trade current account deficit in the balance of payments. And as a result, Sri Lanka will have to now generate other types of revenues, foreign exchange earnings for Sri Lanka to manage its balance of payments. Now, those things are again outside the purview of the central bank. For example, most of the loans which Sri Lanka would be getting from the rest of the world are being channeled by the government of Sri Lanka and the private sector of Sri Lanka. And at the same time, the foreign direct investments, which are non-debt for foreign exchange flows to Sri Lanka, are also outside the purview of the Sri Lanka, the central bank, and therefore central bank job has to be to coordinate all these forces that are outside Sri Lanka to manage the economy, its exchange rate and its inflation rate. So it's a continuous watch, continuous monitoring, continuous collaboration with the rest of the country and the rest of the world to do that. So it's a gigantic challenge which we are facing in the Central Bank of Sri Lanka, Maharishi.
Which are coming to crisis management. Despite a prolonged crisis and the recovery that is not yet complete, the macroeconomic indicators such as inflation rate and exchange rate remain quite stable, and external inflows are robust. This shows macroeconomic robustness of the Sri Lankan economy at this time. From your experiences as a deputy governor, can you explain how the central bank has been able to bring the economy on track in such little time post-COVID?
Well, of course, the Sri Lanka's economic crisis is not actually something that had happened recently. It is the culmination of progressive development which we had throughout our post-independence period. But what happened was because of some of the unsound economic policies adopted by uh, Gotabaya Rajapaksa as president, who became president in 2019. And also Sri Lanka was very badly hit by the global COVID-19 pandemic. And both these forces had triggered the Sri Lanka's economy into a major crisis which had been unprecedented in its history. So therefore, central bank actually didn't have any experience to handle that kind of a crisis at that time. But what happened was when most of the economists, including me, had advised Gotabaya Rajapaksa government that it should go to IMF and get IMF support to overcome the balance of payments crisis, foreign exchange crisis which the country was facing, that government actually listened to us only very late, not immediately, and as a result, the crisis that hit Sri Lanka's economy and the COVID-19 pandemic exacerbated the particular crisis. And therefore, by the time when we went to IMF, we didn't have any experience of managing the crisis. But what the best thing is that the friends of Sri Lanka, I have to mention here India, China, Japan, European Union, UK, and also USA, all these countries were behind Sri Lanka and they were all canvassing for Sri Lanka to go to IMF. When we go to IMF, Maharishi, one of the advantages for a country which doesn't have an experience is they have a set policy package. And therefore, we don't have to frame our own policies. Policies are all had been, prepared by them. They had been tested in other countries, and also they have been supported by the global community. For example, I can recall that some of my colleagues in the central bank, they were confiding in me that when they wanted to get India to provide the massive loan to Sri Lanka in 2021, the Indian government had advised Sri Lanka to go to IMF. Because India is not a country that depends on IMF, but of course India believes that if the country gets the certificate of IMF, that you can trust that country because the money will be used by that country very prudently, and therefore India can support them. Because only after Sri Lanka agreed to go to IMF, India started providing its financial support to us. In fact, the initial economic downturn was averted by Sri Lanka, reversed by Sri Lanka with a massive loan from India, Reserve Bank of India, and also the central government of India. And you can recall that when Sri Lanka had to repay some of its commitments to Asian Clearing Union, amounting to some 500 million US dollars in December 2021, India postponed that for 6 months and allowed a breathing space for Sri Lanka. So Indian support had been there. Along with Indian support, the China also started supporting Sri Lanka. Japan was also there. But when we went to IMF, with the advantage for a small economy like us without experience is that they have a set policy package. And that set policy package helps Sri Lanka to, as you have already very correctly mentioned, to stabilize the financial side, nominal side of the macroeconomy, that is the inflation rate, exchange rate, and the government budget, and also the balance of payments. And all these things had been stabilized through that particular policy package. But of course, the future development of Sri Lanka, the welfare level of the people of Sri Lanka will depend on how far we would be able to boost the real economy of the country by producing goods and services so that the people will get real income. They will have an increase in real income. And all these are outside the purview of Central Bank of Sri Lanka. And those are matters for the new government that has been formed in Sri Lanka.
Having said that, Vijay, there are critics who actually argue that Sri Lankan Central Bank was behind the curve in its assessment of the economy, thereby delaying its policy response during the post-COVID aftermath. How convinced are you of this argument?
Well, of course, those critics are correct. I mean, I cannot find fault with the critics because central bank had been following a very prudent monetary policy throughout its post-independence history until such time President Gotabaya Rajapaksa was elected as president of the country in 2019. His chief policy advisors, there are three people, the secretary of the president and the governor of the central bank and secretary of the minister of finance. All the three people, they had a different view about the running of an economy. That, you know, they had maintained the position that Sri Lanka can generate prosperity for its people not by connecting Sri Lanka to the rest of the world through international trade, but by developing the internal economy so that the people will get an income for Sri Lanka. And also they had restricted some of the critical imports to Sri Lanka. And therefore, they expected that the farmers would grow various type of products which we had been importing from the rest of the world, and therefore they were actually thinking that the domestic economy based economic development was the main path for Sri Lanka to get out of the poverty and create prosperity for its people. So what happened was, therefore, they had actually done three different things which were not very sound according to those critics who had criticized the operation of the central bank. Of course, I'll have to mention here the criticism should be leveled not only against the central bank but also the Minister of Finance and the President himself, because the government had given a very lucrative unsolicited tax cut to people, so that government lost about 700 to 800 billion Sri Lanka rupees every year by way of tax revenue. At the same time, the government had gone for a very unsound policy of converting Sri Lanka's agriculture to organic farming overnight by curtailing, by actually banning the utilization of chemical fertilizers and pesticides. So it actually affected the agricultural sector of the country. Thirdly, they were banning most of the imports that we were getting foodstuff from the rest of the world, believing that the domestic farmers would grow those products and as a result they would generate new real income for the country. So at the same time, the COVID-19 hit Sri Lanka. The government lost its ability to manage the economy because it didn't have enough revenue to manage a crisis like that, the external crisis like that. And what happened was then the governor of the central bank was very willing to lend to the government by printing new money. And as a result, they were following a new type of monetary policy, which was known as the modern monetary theory, which is actually a breakaway group from the mainstream economists. There are only a very few people, and that was an extension of the old Keynesian economics, where the Keynesian economists, not Keynes, Keynesian economists believe that by printing money and spending that money by the government, you can increase the aggregate demand. When you increase the aggregate demand, then the aggregate supply will be increased. When the aggregate supply is increased, you generate new employment, you generate new output, you generate welfare for the people. So that was the argument. So the governor of the central bank, who was an academic and who didn't have any central banking experience in his life, he firmly believed in this modern monetary theory, and he was supported by his president's secretary and also the secretary of the Minister of Finance. And therefore, the president Gotabaya Rajapaksa was simply a victim among these three giants in his economic policy making. And as a result, what happened was the central bank started funding the government by printing new money. So the inflation rate went up from about, say, 5% to about 70% within a matter of 10 months' time. There was a pressure for exchange rate to depreciate, but the new policy of the government didn't allow exchange rate to depreciate. They wanted to keep it at a fixed level because they thought that when you keep the exchange rate at a fixed level, that is a good certificate for their good economic management. And they refused to go to IMF. And as a result, the problems are brewing within the economy. So I can say the critics are correct when they say that the central bank had been responsible for that. But in my view, not only central bank, the Ministry of Finance, and the entire cabinet of ministers, and also the government, who are actually responsible for the economic crisis. In fact, some of the citizens had taken this case to the Supreme Court of Sri Lanka, and they actually charged the president, Gotabaya Rajapaksa, his brother, Mahinda Rajapaksa, was the Minister of Finance, then his other brother, Basil Rajapaksa, who was the Minister of Finance later, then the governor of the central bank, secretary to the president, and secretary to the treasury, and two other members of the monetary board. They were all charged by the citizens for crippling the Sri Lanka's economy. And the Supreme Court of Sri Lanka, by a verdict of 4-1, had found that these people had actually done that. And therefore, what I can say is that the critics are correct in blaming the central bank as well as the government for crippling Sri Lanka's economy during that period.
Which, as you rightly pointed out, the role of the Rajapaksa government in the 2022 economic crisis, the 100 billion incremental liquidity that was infused in the system, and which ultimately resulted in inflation number going beyond 60%. And you did talk about this. But the policy response to deal with that situation, Vijay, was actually very expensive for the still recovering economy of Sri Lanka, when interest rates actually went beyond the 15% threshold. Uh, what are your thoughts on the actions or the policy response that the central bank undertook to contain the inflationary pressures on the economy?
Well, Maharishi, the policy response in that kind of a situation is known as the shock treatment. When a person is dying, the doctors might, use a little mild dose of electricity to activate his dying heart. Similar to that, the policy response by the Central Bank of Sri Lanka when the new governor was appointed, of course, he was supported by IMF, then he was supported by India and China, which were actually behind the scene. And he was also supported by the new secretary of the Ministry of Finance, who was also former deputy governor of the central bank. So therefore, the policy response was a kind of a shock treatment. But of course, when you have a shock treatment, you must know when to exit also, because we cannot continue to provide the shock treatment, so that if you do so for a patient, the patient will die not because of the original ailment, but of the shock treatment that is being continued on the patient. So what happens here is that unless you exit it safely at a suitable level, you will not be able to recover the economy correctly. Now, this is exactly what happened to Sri Lanka also, because the interest rates were increased to around, say, 20% the bank rate, commercial bank rates, and the treasury bill rates to 30%. And there were lots of, yeah, restrictions on imports and car imports and various other imports, which also affected the importation of the raw materials for industry. So industries were crippled. So because of all these reasons, the policy response was considered to be a too harsh response. But in my view, the initial shock treatment is all right, because if you just give an initial shock treatment, it will simply bring the chaotic economy back to order. So that is what the central bank did. But of course, with the support of IMF and with all these other friendly countries like India, India was behind Sri Lanka. China was also behind Sri Lanka, Japan, then France. France is not a part of Sri Lanka's economy in the past, but of course, in this particular case, France teamed up with India and Japan to restructure Sri Lanka's external debt. Now, all these friendly approach, friendly support that had been given to Sri Lanka had been able to minimize the initial adverse impact of the shock treatment. So that is why within a matter of about, say, 2 years' time, Sri Lanka was able to get out of the original, the strict monetary policy stance which Sri Lanka had been following, and Sri Lanka is now actually following a very liberal monetary policy stance now, today.
And that leads me to the question on central banking independence, Vijay. Now, that has been a major debate in the Sri Lankan public domain, especially after the 2019 Central Bank bill, which prohibited Treasury Secretary or any government member to serve on the Monetary Policy Board. In your opinion, does this help in the maintenance of the central bank's independence and policy setting? Uh, which is actually a very crucial component of a public institution like the central bank?
The, uh, the This bill was passed not in 2019, it was passed in 2023 by the new president, Ranil Wickremesinghe. That
Right.
had been actually a very critical requirement which Sri Lanka had for a long period of time, even when I was in the central bank as the deputy governor. In 2004, we drafted the new central bank bill uh, to take the treasury secretary out of the monetary policy decision. And then in 2017 also, the central bank did another bill, and 2023, the new governor was responsible for doing that. That was a very critical requirement for a country like Sri Lanka, because when we look at how the central bank was set up in 1950, uh, on a report submitted by a single person called John Exter, was at that time a senior vice president of the Federal Reserve System. He had actually modeled Central Bank of Sri Lanka on the same way that the Federal Reserve System had modeled Central Bank of the Philippines, as well as some of the central banks in the Latin American countries. Now, our experience is that that particular model where the central bank was permitted to buy treasury bills from the government from primary auctions was uh, actually misused by all the ministers of finance, because they thought that getting central bank money is the easiest way of financing the budget rather than getting the taxpayers to pay taxes. So the Central Bank of the Philippines became bankrupt in 1993. Most of the Latin American countries, of which the central banks were based on the same model, they also became economically bankrupt. And Central Bank of Sri Lanka also became bankrupt in 2022 in the same way. So independence of the central bank is a matter which the people of Sri Lanka will have to demand from the government. I mean, it's not something which we have to get as a concession from the government. That is the demand which we have to make, and that particular demand is made because it is we who are holding the money that is being printed by the Central Bank of Sri Lanka by exchanging our real assets. So therefore, we have a right to get the real purchasing power for the money that we are holding. For that purpose, we expect Central Bank to act independently. So when the treasury is taken out of the central bank's decision-making process, it actually helps the central bank's monetary policy board to make decisions independently. But of course, we have to be mindful of the fact that the government is a sovereign government, and the central bank cannot, when it functions under sovereign government, it cannot be fully independent. But there should be a proper collaboration, cooperation, and also proper support from the government also. Fortunately for Central Bank of Sri Lanka, the Ranil Wickremesinghe government, as well as the present Anand Kumar Dissanayake government, they are supporting the particular policy package being adopted by the central bank independently. That is because that particular policy package is endorsed by the International Monetary Fund. So my fear is that, after 2027, when the IMF is not in the picture, whether the politicians would have the same attitude towards the independence of the central bank, because they might think that independent central bank is actually not in favor of their continuing as economic policy makers. So they might want the Central Bank of Sri Lanka to be under them. So therefore, my fear is that after 2027, the Central Bank of Sri Lanka can continue with the present independent monetary policy making. But today, of course, we'll have to be mindful of the fact that the job that is being done by the Central Bank of Sri Lanka is an excellent job.
That's a very interesting insight, Vijay. Uh, Deficit financing on the part of the central bank is an Achilles heel in the developing world. Now, taking attention to the global headwinds, Vijay, US economist Joseph Stiglitz attributed Sri Lanka's 2020 debt crisis to the post GFC quantitative easing, aiding the exporting of debt bubbles to developing countries like Sri Lanka. There is one argument pertaining to the Chinese debt traps also impacting the economy in a very detrimental way. What are your views on this?
Well, of course, what happened was we'll have to admit the fact that the government of Sri Lanka is making a dish saving. Its revenue is insufficient to meet the consumption expenditure, which you call the recurrent expenditure of the government. Therefore, government is a big dish saver in Sri Lanka. At the same time, since we are having a deficit in the current account, overall national economy also, we are dependent on the rest of the world because we have a deficit in the savings investment gap. Now, to finance that savings investment gap, either we'll have to increase domestic savings or we have to borrow from the rest of the world. So what happened was all the governments in the past, which were the ability to print money and finance the government expenditure, didn't take seriously the requirement of running a surplus in their current account. So we had the deficit in the current account, and as a result, our savings were very low. Because of that reason, Sri Lanka had to somehow meet the investment requirements also, which are in the region of about, say, 28 to 30%. But our savings were around 22 to 23%. So there's a massive savings investment gap, and that gap had to be funded out of borrowing. So what happened was after 2008, when Sri Lanka graduated from a low-income country to a lower middle-income country, we didn't get the concessionary financing that we were getting from the World Bank, from ADB, from IFAD, and also the various other friendly countries like, say, UK, China, Australia, Japan, and so forth. So the Sri Lanka had to go for commercial borrowings. So that is where, these critics are saying that we had, gone into a wrong way of doing that. But what happened was, now even Singapore also during the initial part of the economic development, they went for commercial borrowing. But those commercial borrowings were very prudently used by the Singaporean government and the investor. In our case, what happened was the commercial borrowings were simply used to fund the rising current expenditure of the government, So therefore, part of the dis savings were also funded out of the commercial borrowing. So we didn't have sufficient foreign exchange earnings to meet the foreign exchange liabilities when they became due. So as a result, Sri Lanka had to face a serious problem. So that serious problem is not because of the quantitative easing, but because the bad economic policy of the government of not not having a surplus in the current account. Even the present government, guided by the IMF, is ignoring this requirement, and they are just going for a surplus in the primary account rather than the current account. So what happens is that the current account is still in deficit, so the government is a dissaver. So we have to depend on the foreign funds, foreign exchange flows into the country to meet the high savings investment gap. Instead of generating domestic savings through appropriate monetary policy and interest rate policy, Sri Lanka is depending on the rest of the world. And when it comes to commercial borrowing, of course, now after we had we suspended the payment of international sovereign bonds, we cannot go to the commercial market and borrow anymore. But the China had been a willing lender to Sri Lanka throughout. Because what I mean is that, when you get a loan from, say, ADB or World Bank, or even the Japanese government, concessionary funding, it takes about 2 years for us to complete it. Because they will send a program mission, then they will send a technical mission, then they'll have to negotiate the loan, then they'll have to sign the loan, and then the loan has to be dispersed by the respective governments and the respective institutes. It takes about 2 years. But the Chinese loans, you can complete it within a matter of, say, 3 months' time. So Sri Lanka government had gone to China, and China also been offering those commercial loans to Sri Lanka very easily, without having a waiting period. And also, most of the projects that were funded out of the Chinese loans were either uneconomical, or they had a long gestation period, like the Hambantota Harbour. And therefore, we didn't earn enough foreign exchange to service that debt. As a result, we had the problem of repaying our foreign debt. But of course, I don't blame China. I blame the Sri Lanka's economic policymakers for not using the Chinese lending power, because China was willing to lend to Sri Lanka and other countries. So China has a lending power, and that lending power had to be used by Sri Lanka for the benefit of the country, and that particular requirement had not been met by our own policymakers. So that is where we had gone into trouble, not because of quantitative easing or having an easy path towards the foreign borrowing.
Well, you just mentioned that Sri Lanka graduated from a lower income economy to a lower middle income economy sometime in the recent past, and now the Sri Lankan economy is actually somewhere near the upper middle income status. Do you think that would impact the concessional loans that it accesses in the near future? I mean, would that be a problem in debt servicing?
Well, that will be a problem. In fact, that will be a
Mm.
problem because now we are at the threshold of, graduating to upper middle income economy
Yes.
now. Maybe
Mm.
within the next 3-year time period, we will cross the
Mm.
threshold and become an upper middle income country. And of course, when you are in an upper middle income country, you cannot get any concessionary loan from anyone. You have to go
Right.
to even from ADB, even from World Bank, even from the countries like UK, Japan, and the Australia, which are also providing concessionary loans to Sri Lanka, we'll have to get them on commercial terms. So that is why it is very essential for Sri Lanka's economic policymakers to prepare a long-term development plan based on the country's requirements as well as the available resources, so that whatever the foreign funding that is being channeled to Sri Lanka will be utilized for that purpose, like the way the Singapore did in the initial period of their economic development. Because we need foreign funding. Without foreign funding, we cannot, because we have a huge savings investment gap. So we cannot fill the savings investment gap without foreign funding. It's necessary. Now the question is whether that foreign funding will come as concessionary loans or on commercial terms. Because of the graduation of Sri Lanka from the lower middle income country to higher middle income country, the concessionary funding by all these institutions will be completely stopped. Then we'll have to get them on commercial basis when we get it from on a commercial basis, uh, it is essential for Sri Lanka to have a proper economic policy and economic planning to direct that, those commercial borrowings to projects which should generate continuous high income for Sri Lanka. And most of these the projects will have to earn foreign exchange in order to service that loan. So this is a new challenge for the new government of Sri Lanka, because if it ignores this particular requirement, we will be, getting back to the old situation of, getting into another economic crisis.
And the central bank may also have to consider uh, how the capital account convertibility evolves from here, because then if the economy evolves into a high income category, then even the capital movement becomes a problem.
Yeah, of course, the
Mm.
even today, Maharaj, we have this problem. For example, hot money coming to Sri Lanka, even though
Right.
we have not opened the capital account completely, we have opened the inflows into the capital account by way of selling government bonds, treasury bills and treasury bonds to foreigners. And the foreigners, since we are offering a very high interest rate to them, at the same time, we are maintaining a stability in the exchange rate. As a result, the hot money had been flowing into Sri Lanka, about say 4 billion US dollars right now, which is about,
Right.
say, the usable foreign exchange resources are also about 4.5 billion in Sri Lanka. So it's about 80% is hot money. So what happens is,
Okay.
if we don't have proper policies to open up Sri Lanka's capital account, and also if we don't take action to mitigate the risk that might arise, this hot money will flow out of Sri Lanka whenever there is a global, either internal shock
Right.
within Sri Lanka, or whether
Exactly.
there's a favorable global
Uh,
shock outside Sri Lanka.
mm.
For
Yep.
example, when USA increases interest rates,
Mm.
money might go flow back to USA. So
Mm.
therefore, it's a big risk for Sri Lanka. I mean, that is why, at the beginning of this conversation, you referred to the fact that Sri Lanka is a small economy. That small economy would matter in this case so much because Sri Lanka doesn't have enough foreign exchange flows to keep an open capital account right now.
Reminds me of the ASEAN crisis and how rising US interest rates impacting those economies, and eventually the hot money that you just mentioned. I mean, that just left those economies high and dry, and that's how the economic crisis actually started. So that's a very interesting point. But do you think, Vijay, that Sri Lanka's external debt makes the economy highly vulnerable, and there is a need to have limits? This is because higher issuance, as you just mentioned, during the QE phase was eventually replaced by the QT-linked risks in the financial system.
Well, of course, the Sri Lanka's total debt is not what the central government has borrowed. Sri Lanka's total external debt, as defined by IMF in their definition, it includes the borrowings by the central government, borrowings by government institutions, borrowing by the private sector, and also the borrowings by the by all the economic units of Sri Lanka on a guarantee given by the government of Sri Lanka. When you add all
Mm.
those things into account, our total foreign debt is about, say, 100 billion US dollars, almost equal to the GDP. So it's highly vulnerable. I mean, you may recall that, most of the countries in Latin America, they went into a debt crisis because, not because of the central government debt, because of the private debt they had to service, because Mexico and Chile, Argentina, they went into trouble because they could not service the private debt. In the case of Sri Lanka also, we are having the same problem. Of course, the central bank had borrowed from the Reserve Bank of India and also from People's Bank of China, in addition to its borrowing from IMF. So, Reserve Bank of India is now, I think, gradually recovering what it had extended to Sri Lanka, not immediately. People's Bank of China, the soft facility had not been utilized by Sri Lanka because Sri Lanka cannot use it. Because one of the conditions is that for us to utilize it, our foreign reserves must be sufficient to meet the at least 3 months of future imports, which benchmark we have so far not reached. Therefore, that particular loan of 1.5 billion US dollars had not been used by Sri Lanka. Central bank has no problem of prepaying the debt it has incurred to IMF because but of course the private sector, the private corporations, and also already the Sri Lankan Airlines has defaulted because it didn't have enough foreign exchange. So we are highly vulnerable. That's no question about it.
And what strategies is the central bank using to prepare itself for a scenario in the future?
Well, the central bank had already announced that it will be monitoring the situation very carefully, which is a must. Then it is actually opening up the economy gradually. You can see when they allow the government to open the car imports, the initial allocation of foreign exchange was only $1 billion, not more than that. So likewise, it's a gradual and a phased out opening of the economy, and it's monitoring the situation very carefully. And also it has not, even though there's a demand that the interest rates will have to be reduced even from the present levels to a lower level, it had not acceded to the demand of the government to do so. It is maintaining the central bank policy interest rate around 7.5%, right, even today. Because the central bank, because there was an economic deflation in Sri Lanka, and deflation required Sri Lanka to cut down interest rate further and expand the aggregate demand, but central bank didn't do that. So what I feel is that it is actually having a very conservative approach to this problem, monitoring the situation and phasing out the liberalization, and also doing it as and when it is necessary. So this kind of policy strategy is useful for Sri Lanka to manage it. But of course, the overall management will depend on how far the real economy will grow, how far our exports will grow, how far Sri Lanka would be able to earn foreign exchange, because we are depending on the remittances, and also presently most of our foreign exchange earnings are through tourism, which are again highly vulnerable. So because of these two reasons, the factors that would actually influence Sri Lanka to manage this foreign exchange situation, foreign debt situation, are outside the purview of the Central Bank of Sri Lanka.
Due to global economic uncertainty and other regional challenges, many countries today are facing a debt crisis. And that includes a couple of advanced economies, including the US, France, and the UK, which are basically witnessing a deterioration in their fiscal health. So naturally, international unilateral agencies such as IMF have to play a critical role in saving the economy. Perhaps not so much for the advanced economies, but especially when it comes to developing economies, IMF actually plays a very, very important role. Therefore, what reforms do you think are required at the IMF to make it more effective, in your opinion?
Well, what the IMF can do for Sri Lanka, it has already done. I mean, we had
Right.
stabilized the nominal side of the macroeconomy.
Hmm.
And what is necessary now is to develop the real economy, boost our exports of goods and services, and also link in Sri Lanka to the rest of the world. So all these things are outside the scope of IMF and outside the scope of the Central Bank of Sri Lanka. But of course, I have seen even the IMF mission that visited Sri Lanka last week, they were emphasizing to the president of Sri Lanka that he should continue with the economic reform program to tackle what I have just mentioned. I mean, to remove the bottlenecks for the growth of the real economy, remove the bottlenecks for exporters to export goods and services from Sri Lanka, and also the create an economy which is linked to the rest of the world, integrate to the rest of the world without any obstacles or interruptions. Now, those are the things which Sri Lanka government will have to do continuously, and in my view, uh, IMF and Central Bank have done their job already. They have completed their job. It is up to the government of Antakumar Dissanayake to take the Sri Lanka economy from this level to the next level.
The reason why I was asking this question Vijay, was that austerity measures, which are basically forced upon the certain economies by the IMF, has a lot of basically attracts a lot of public dismay, and it's pretty expensive on the government's part. And I think we have seen that in the case of Pakistan, where austerity measures invited a lot of public dissent against IMF and such bailouts. So, do you think such dissent might be foreseen in Sri Lanka if an IMF bailout is ever required by the economy?
Well, of course, it has already happened. I mean, the people are
Mm.
not, they are protesting against the rising cost of living. Even though the
Right.
inflation rate has been, stabilized, the cost of living is still high. And even the World
Mm.
Bank, I think, in a recent report that they have released on Sri Lanka and the Maldives, they had
Mm.
drawn the attention of the government to this factor. High food prices have not reduced the level of poverty in Sri Lanka. So this
Right.
this particular agitation is going on.
Mm.
Austerity measures are not being welcomed by anyone because it's
Mm.
something that is forced upon you. But
Mm.
whether the government of Sri Lanka would be able to withstand the protests that are being made by Sri Lankan population for relief from the high cost of living and high belt tightening that they have been forced to do through this
Mm.
IMF program will depend on how far they would be able to sell this particular package to the people. There must be a
Right.
proper communication strategy. There must be a proper introduction, and therefore people will learn that this is for their own benefit, and therefore
Mm.
the government will be able to manage it. But of course, the type of the agitation, type of boiling inside Sri Lanka's economy is still happening, just like in Pakistan or any other country. There's no
Mm.
any difference between Sri Lanka and those countries as far as the austerity, anti-austerity measures are concerned.
Finally, Vijay, India's central bank, the RBI, has announced that Nepal, Bhutan, and Sri Lanka can now trade in the Indian rupee. How will this help the Sri Lankan economy, in your opinion?
Well, of course, that had been a demand which we had made making, for a long period of time. But Reserve Bank of
Mm.
India didn't allow, didn't agree with us. But now, of course, the Indian Reserve Bank of India as well as the Indian government is trying to become a global force, global economic force rather than a native economic force. So as a result, they have permitted Sri Lanka, Bangladesh, and also Bhutan and Nepal to use Indian rupees. But what
Mm.
happens is, how do we earn Indian rupees? Now, for us to earn Indian rupees, Marisi, you will see we'll have to have an export surplus with India because we have to export goods and services to earn Indian rupees so that those Indian rupees can be utilized by us for making payments for import. But we are running a huge trade deficit with India. So
Mm.
is the situation with Nepal and Bhutan also. And as a result, unless the Indian tourism flow fills the gap between the Sri Lankan exports to India and Sri Lanka's imports from India, tourism gap and the Indian investments will fill that. We don't have foreign Indian rupees to make payments. We have to borrow from India. So it will mean that the Sri Lanka situation, the same situation for Nepal and Bhutan also, our borrowing sources will shift from the Western countries to India now because we have to run a deficit with India and earn foreign Indian rupees to make payment. For that purpose, we'll have to in the near future we'll have to do that. Otherwise, what happens is this using Indian rupees in Sri Lanka will help the Indian tourists who come to Sri Lanka to avoid the conversion of Indian rupees to dollars and then dollars to Sri Lanka rupees. They can spend them as in Sri Lanka as Indian rupees. Sri Lankan banks will accumulate Indian rupees. So whenever Sri Lankan banks have to make payments to India, the exporters from India, and also to people who travel to India on pilgrimage and holidays, Sri Lankan banks will have to use that. Even then, what is being earned is very, it's a fraction of the requirement. So unless Sri Lanka borrows from India and indebted to India, we will not be able to successfully implement this Indianization of Indian rupee in the region.
I'm actually a big advocate, Vijay, of deeper economic integration with India, with the rest of the SAARC nations. But I think that's a different discussion altogether. Maybe we can leave it for another day. But that's all I have for today. Thank you once again for being part of the show. It was a great honor.
Okay, thank you very much, Marzi.
Thank you.